Hi, Joe. Yes, non-farm productivity, maybe the special sauce in the U.S. economy, expected to be up unchanged, comes in at up 0.2%. Definitely better than expected. Rear view mirror, not revised yet. It was up 0.3, up 0.2, even though it's better than expectations. That's still the weakest since the first quarter of last year when it was a negative 0.3%. Unit labor costs come in a bit light. 4.9 expected, 4% arrived. Last month's 4.7, at least up to now, is still unrevised. 4%, how does that figure in? Well, obviously, 4.7 last month, it was higher, and that was the highest level going all the way back to the first quarter of last year. Now, let's look at the trade balance, shall we? On trade, expecting minus 76 billion, comes in a little lighter, minus 74 billion, and a revision takes minus 69 and change down to minus 68. Initial jobless claims up 8,000 from a slightly revised 221,000, which leaves it at 229,000, which oddly enough is enough to make it the highest level since the first week in May when it was 232,000. So 229, 232 comp first week in May. On continuing claims, it remains under 1.8 million again, 1,792,000. Last month's slight revision, almost right on top of it, 1,790,000. It just amazes me how steady these are. And when we continue to think about quits, job openings, and some of the other metrics that are involved in the labor market, even though these initial continuing claims are considered some of the most relevant real-time information describing the labor market, it certainly seems at odds with some anecdotal evidence that's actually moving up on the food chain from anecdotal to more significant. I question sometimes some of the accuracy of how states report and whether this ongoing number and how tame it's been at these low levels, how accurate it really is. As far as the press conference, of course, I can't tune in to Christine Lagarde, but I can see that we have a little extra helping of volatility. Interest rates have been moving around quite a bit, but as we hover here right under 429, we are basically up, 1 basis point on 10s. 2s at 472 are about unchanged on the session. And as much as everybody wants to discuss the ECB and how everybody's running at different speeds with regard to their economies, I personally think that this opens the door to potentially bring our percentages of an interest rate cut maybe closer, or maybe September move higher, maybe even a little bit closer. Why? Even though I think there's sticky inflation around the globe, and especially in the U.S., and especially in energy, I think the asymmetric approach to the investment community based on being led by central banks continues to underscore the easing side of the equation. I think that will be gravitated to based on the ECB's actions today. Becky, back to you.
Although, Rick, I would say what Steve's already told us about the ECB statement makes it sound like they are kind of dipping their toe into this. We're going to cut once, and then we're going to wait and see. And our inclination is not to move too quickly on any of this. It sounds like they are waiting to see what the Fed does next.
No, I wouldn't disagree with that, but I do think that this is going to have a bigger effect on other central banks over the next several sessions than maybe we're pricing in currently.